What's up, guys? Hopefully you guys are having a great holiday weekend. Be grateful. Happy Thanksgiving. A lot of people don't make videos. They take breaks, so I figure I might as well make a video. Also, there is a great opportunity. This will be a quick video, I swear. First of all, not financial advice. Consult your licensed financial advisor. Do not invest anything you're not willing to lose or lose sleep over. So, I don't want you guys to miss out on this once a year opportunity. It's really worth it because they only do it once a year. So I've actually paid full price, 700 and something for the premium, and that is a lot. It's way overpriced. Most of you guys probably don't need premium. I do it for videos. You know, I could put up 8 charts at once if you guys haven't noticed. So, there's the Pro, and this is for trading view, right? And then there's the Pro Plus and the Premium. You get a 60% off. You have 7 hours left to take advantage of this. I get a kickback if you use my link. My link will be below this video in the description section. And you also get a $30 off. So, the Pro is $108 for 13 months. Pro Plus is 180, 13 months, and the premium's 288. The packages are: the Pro includes 5 indicators per chart, 2 charts in one window, 20 server-side alerts. It's ad-free. They're all ad-free. Volume profile indicators, custom time intervals, multiple enhanced watch lists, bar replay, intraday bars, multi-monitor support, and desktop app. So the Pro, I believe, is worth it for most of you guys. If you're if you're actually day trading and you're a professional, you would probably want the Pro Plus or Premium. The Pro Plus is 10 indicators, 4 charts, and then the rest is just a lot more. And then the Premium is 25 indicators per chart, 8 charts in one layout, and everything maxed out. So I don't want you guys to miss out. I almost forgot this year. I would have made a video earlier this week about it if I didn't. And you have 7 hours left, so you want to hop on that. And you have to use a referral link to get $30 off, which will be below this video in the description. Shameless shill. I am. Alright, so let's talk a little bit. Let's do an update. The economic calendar is pretty dead next week after the holidays, and usually volume's very low. There will be tax harvesting sell-offs coming, I believe. And the next FOMC rate hike is coming in December 13th, which is like 2.5 weeks away. I believe he's going to do a 50 basis point or another 75 because the market is up. It's up and about, right? It's high up. It's getting a nice rebound right now. The S&P's at 4,000. The Dow Jones is at 34,347. And it's trying to break above the previous high, local high, which is technically it's bullish, but looking at the oscillators, it's still overbought. Could be just a giant bull trap, right? In a bear market, which it will be, in my opinion. Not financial advice. Now, listen, if the boars stop all of a sudden, China opens completely up, but they didn't. They closed down again because of revolts. If you haven't seen on my Twitter, the iPhone revolt, which is like tens or hundreds of thousands of slave labor. Anyways, in the case of that, and let's say inflation drops and they only raise rates like 25%, then yeah, the market can go a little bit higher, heading towards like 35,000 on Dow, 4,200, maybe even 4,300 on the S&P, and that's getting close to previous highs. Not super close. That's like trillions of dollars in market cap going up. Like it would take some serious money to put it up there, but I doubt it. I don't think that's what's going to happen. The market might just trade kind of flat for the next few weeks, just to see where what Powell's going to do in 2.5 weeks with the next rate hike. And I think he's going to come hard with the rate hike because he can, and he's just going to keep going to stop inflation, because inflation really isn't coming down. It is coming down in things you don't need, but it's not coming down in things you do need. Energy, food, stuff like that. You guys know. So, and what it's really about is the Fed keeping its the Fed doesn't want to lose credibility. It's keeping its credibility. So, after the recession and the economic downturn and some employment, inflation really does come down, and then they could come in and bail everything out. But they need to get inflation back down. I mean, ideally sub 4% year over year if they're lucky, but we're not there yet. We're still above 7% according to their numbers, which is, So, yeah, I mean, they have to I think Powell's gonna keep raising until it's so bad and it's so serious and so obvious, and the markets have so much more to fall. Like, look at the Dow is probably gonna do better than the other indices, especially better than the NASDAQ. But the S&P is kinda in between. If you zoom out, it's still massively up. Massively up. That's why everyone's still shopping. That's why, the pain. That's why there wasn't really a giant red wave and all that, right? From the COVID bottom, the S&P is, right now, it's still up 83%. The all-time high was 120%. From the 2019 top, it's still up about 18.6%. Why? Because they're still why? You want to know why? Because people got wage increases, right? And it's still up. So their money's still going into the markets, and there's still plenty of asset inflation. Housing still has to drop like a lot more, and everything has to drop a lot more, even car prices and everything. And employment is looking great. So while employment looks great, they could keep hiking and hiking. Listen, Volcker raised it like 20-some percent. Powell raised it to 3.5, 4%. The Fed funds rate. Well, inflation's running above 7. Technically, they have to get it above 7 to really bring inflation down. I doubt they'll get there. They'll probably get maybe to 4.5. No, they'll probably take it to 5, 5.5. That's what he's really got to do. And by then, because there's so much debt outstanding, that will create deflation temporarily for like a year, 6 months, maybe a couple years. And then we could do this game all over again for whatever reason, whatever the next Black Swan, probably like more wars or something. Who knows? Because China doesn't look too great. So that's my thought as of right now. Nothing's really changed. I'm just waiting for the second shoe to drop. When? Maybe in a couple weeks. Maybe Q1. Maybe we have to wait another month and a half or 2 months. But it's coming. But here's the thing. The market's already like priced that in. So on the S&P, I doubt it's going to make a higher high. It can run a little higher, up to like 44,260, something like that, to test my blue line. But then it should get rejected to make a lower high, and then the second shoe to drop, right? Looking at it from a technical technical analysis. On the daily, it is on a 9 sell though, and it's come up on 2 moving averages, which is going to act like resistance. So it's going to happen, I don't know, in the next week or two. We could start selling off for whatever reason, or which would probably be the rate hikes coming up, or it breaks out and above, and it just goes up a little higher, right? Like this. So it's either like this, or breakout, takes like 3-4 weeks, 5 even 6, and then down. That's what I'm thinking as of right now. I'll keep you guys updated. The yield curve is totally inverted, massively inverted from the short term versus it's completely inverted. And like I said in my last video, it usually gives you like 6 to 9 months or something. I think this time it's going to be much quicker because everyone kind of we've had inversion a couple times this year, and the debt is so much greater. And foreign countries are selling the U.S. treasuries because they're in bigger trouble, like Japan and China and all of them in Europe. So I'm waiting for something internationally to break. That'll be bearish for the market. And then it'll take probably a few more months for something really big to break for the legacy markets in the U.S. Maybe pensions or something. I don't know. But the U.S. will be the last domino. In the crypto, I have a strategy for private members. It's pretty dope for Hex and perpetuals. But what is interesting is a lot of end stakes are expiring right now and for the next like month or two. So watch out for that. There'll be a lot of more liquid Hex. And the T-share rate is it's down, the T-share rate, meaning it's a great time to stake or to lock in a good stake because it costs less in US dollars. Now, will the price go lower? I think it can. I mean, if the second shoe to drop for the markets hasn't happened yet in the stock market, and Bitcoin hasn't fallen to like 11,000, 13,000 at least, something like that, there isn't the second shoe to drop in crypto as well, I believe. But, you know, I have a strategy, and it's a long-term strategy, but the time to take advantage of it is for the next 4 to 6 months, and then you could keep doing it for years and years, and you could really, let's just say, multiply your gains in the next 3 to 4 years for the next bull cycle in crypto. And the time to set yourself up to be a whale is during bear markets. Bear markets are your friends to set yourself up for massive gains during the bull market in, like, let's say in a year or two. Okay? And it includes all of these. Even Poly and all that. Let's talk about the news real quick. Schwabi, there was a leak of like an interview or something. Why would Facebook get your financial information? That's insane. That's why I deleted that like 8-9 years ago. How to manage risk in crypto. It's very simple. You do not have anyone else hold your keys. You have to do self-custody. If you're not doing self-custody, then you're not in crypto. You're just sitting on an exchange waiting to get rug pulled by a hack or the exchange itself. It's pretty evident this happens every bear market, and that's why I believe Hex is the best, because you do self-custody to get massive yield. Again, like, people look at the chart, and if you zoom out, it's still up for most of us who got in early, right? Who didn't get in at the top or whatever. And it's down from the all-time high, 94%. But if you're staked, and it depends how long your stakes are, you know, short-term get less yield, long-term get massive yield. this pullback is canceled when you're staked. Okay? And most people don't realize that or know that for some reason, because it's a new financial innovation. That's why. So I don't look at my staker. I don't even put my addresses in, because that messes with you psychologically. And I've talked about this quite a few times. Don't do that during bear markets, because it messes with you. All right. And then you could use perpetuals to really magnify that. And there's a strategy where you actually want to be holding hex, because whenever pulse chains announce, it's probably going to rally like crazy, and perpetuals may not. Just throwing that out there. Versus hex. The premium might disappear, and you might actually have a discount. That's just, that right there is massive alpha that I shouldn't have given away, but we've got more, so I'm not worried about it. All right. News. California is going to be a horse and buggy town again, looks like, in about 10 years, because I don't know where they're going to get all their rare earth metals, because that takes oil as well. It's just nonsense, guys. I'm just waiting for the full-blown collapse to like play out, and then all this nonsense will go away. What else? People are losing their minds. As things get worse, people just lose their minds as times get harder, right? The FTX thing, there's just every day something new comes out. It's such a rabbit hole. I don't feel like talking about it anymore. It's just like the worst type of... look into it. It's just insane, some of the stuff. The U.S. shale boom is officially over. Yeah, they've been fracking like nonstop for 2 decades. And I feel like all the cheap shale that's not too deep underground has been... but there are a few stocks and opportunities, though. I do believe Europe's going to capitulate with energy this winter if it's a bad winter. Wow. Ford recalls 519,000 Broncos and Escapes. Guys, they just don't make vehicles or anything like they used to. And old people say that, and, you know, I know some old people, and the stuff they have will last forever. It's like solid steel made to last. Cars these days, there's so much plastic on them. Even the the exhaust manifolds and the intakes are plastic. All that shit's going to crack. All the electronics on it's all going to break. Basically, cars are throwaway cars now. They're just made not to last. That's why I keep one of my old cars. It's got an cast iron block. It'll never die as long as I replace the other things that do go after wear and tear, but it's cheaper to replace and just run that car for the rest of my life, because the engine will run forever. But what I'm trying to tell you guys is they just build everything with built-in what is it called? Oh god. Built-in oh my god, I just had the word. It's a great word too. Planned obsolescence. And that's how they keep you buying new cars every 2, 3, 4 years. And you're just a rat in a wheel, just getting slowly falling behind with debt. And it's unbelievable, the world we live in. That it's gotten to this point. But don't have no fear. When everything just falls apart, there'll be opportunities where you could go build your own car company and just make a car that'll last 500,000 miles. Turkeys cost 75% more. China's in big trouble. It's the next big one to go, I believe. That's why there's people dressed in white hazard suits, like beating the public with sticks. and building camps. I can't believe, like, do those people realize how many of them there are? And it could just end in like a weekend if they all got pissed enough fast enough. And it might happen because, you know, global economy is slowing dramatically. So the DXY, I do think, has massively sold off, and I think it's due for a rebound. It's on my 200-day moving average. Is that right? Come on. Whatever. Yeah, well, it's on support. It's at 106, and it's I think it could rebound at any given moment. Equities needs to sell off though for that to happen. It just looks like a perfect setup for a bounce or a rebound, and then maybe new all-time highs. So my target was 120 on the DXY. I still think it could get up there, 120, maybe 130. But for that to happen, the next shoe has to drop in equities. Italians who refuse job offers will have social benefits revoked. That's coming. For everyone, everywhere. There's a digital rupee being rolled out. Like 70 to like 80% of India is really just cash. And the reason they're doing that is because nobody pays, you know. Amazon warehouse workers set to strike across 40 countries. Crazy. We're not robots. I don't see the Amazon trucks rolling around as much as I used to. I really don't. And that's why they said that they're seeing sales drop. And their employees are going on strike. That's a real big canary in the coal mine. MIT reports breakthrough in solid-state lithium battery development. Yeah, I doubt it. So everyone thinks like the markets have crashed this year, this and that. You guys saw the chart earlier. It's not that bad. It's not. It just feels bad because people's balance dollar value has fallen a lot. That's all it is. But in the grand scheme of things, it's still 18% higher from 2019 high. And how much has the market fallen so far? The S&P 500 at least. It's down 16.67%. You call that a brutal bear market? Not in my opinion. Well, the index fell that much. Individual stocks are down 60, like around probably average 60 to 70%. That's why. So a lot of people who invest and don't buy just cookie cutter indices, index funding, then they're massively down. But most, you know, six-pack Joe his retirement gets thrown into index funds. And that's why I feel like it's kind of suspicious that the indices are still up. But all the individual stocks, which make up the basket of the indices, are down 60, 70%. That doesn't make sense. $1.1 billion to keep California's nuclear power plant operating. That's a lot of money for a plant. Alright guys, I don't see too much economic data in the news. It's a slow news week. Smash them likes, use my shill link. I would really appreciate that. And don't miss out. Now you're down to 6 hours and 54 minutes. By the time I upload this, it'll be like, who knows? You'll have maybe 4 hours, 3 hours. This is why you need to follow me on Twitter and my free chat groups, because I posted that yesterday. Alright guys, so the link's below this video. Don't miss out because it costs so much more. 60% more. That's a lot. Alright guys, hit the likes, share my videos please. leave anything in the comment section. It just helps, and I'll continue to do this.